Let's see if they're goodly.
Less than 15 minutes to the Fed rate decision.
I heard myself on YouTube, so.
Check, check, check.
You're good on YouTube. It's blue screen on YouTube. I don't know if that's what you're looking for.
There we go.
Preservation of capital is more important than making money. You want to lock in your trades, and you also want to protect your downside at the same time.
Good afternoon, everyone. Welcome to another edition of American Dream Trading's live futures and education program, special FOMC meeting edition. This is brought to you by American Dream Trading, which is founded by, is owned by, is managed by, is incorporated into a legal business by Chad Christian, who we affectionately call
OCG,
Coach.
Oriental Culture shares pulled back
And
sharply
you'll hear
from the highs,
occasional
up about 23% now.
Narration in the background.
But about
We'll talk about that here in a minute. Anyway, my name is Mark
$6.50 from the
McSee.
high.
Glad you could be here. You know the routine. If this is your first time being with us today, make sure you click that like, share, or notify buttons turned on, and subscribe. Hit that thumbs up over there on the YouTubes. Good. Jamin says, looking and sounding good. All right, good. Bobby says the same thing. Great. Thanks for that feedback. How about the Tiki Talks? How's that sound over there? All right. Should be. All right. Sounds good, Matt says. All right, great. Yeah, that hum in the background is my furnace you hear running, actually. I could turn down the gain a little bit, but I got a, all right. I can tweak it later. Anyway, glad you could be here. At the top of the hour at 2 o'clock, the FOMC meeting results will be released via a bulletin. It will hit the markets instantly at 2 o'clock. If the market's going to react, you'll see that happen at 2 p.m. Matter of fact, you'll see the markets react before we even actually hear what the news release says. And we'll watch ES here, MES, the S&P 500, to see how it reacts. You will hear my Bazinga Pro Squawk Box playing in the background. He will be reading the news release, blurbs of it, and you'll hear him talking. While he's talking, we'll try to interpret what he says and why the market's doing what it's doing. If it's going to do anything at all, we don't know. It could go straight up, it could go straight down, or do nothing at all. It could be a nothing burger. We've had that happen also, where the markets went, okay, we already do that, right? And they didn't do anything. So we have about 10 minutes left before that happens. So if you've never experienced an FOMC meeting, which is the Federal Reserve's release of interest rates, whether they're raising them, lowering, leaving them unchanged, the logic and thought process behind it, how many voted for it, against it, those type of things. At 2:30, the Fed Chairman Powell will actually conduct a live news conference, and we will cover that also. He will initially read a prepared statement for a couple minutes, and then he'll start taking questions from all the financial reporters from all over the world that are assembled there, and he will answer them. So they will hang on his every word, depending how specific the questions are the reporters ask. So you get some really good questions, and you get some really idiotic questions. Some of these journalists, I think they got their journalism degree out of a Cracker Jack box, but other ones are good also. So we'll watch that. So you're going to have 2 periods of potential market movement here in the next hour or so. You're going to see it at the top of the hour, precisely at 2 p.m. when that statement is released. There'll probably be a knee-jerk reaction one way or the other.
Less than 10 minutes now to the Fed rate decision.
There you go. Do you hear that? That's who we'll be listening to. Could you hear that on TikTok? Could you hear that on YouTube? That I need to understand if you can hear that. Bobby, did you hear him say whatever he said, 10 minutes till the next thing? Okay, Porsche Wide Body over there on TikTok said he could hear it. Good. How about the YouTubes? Make sure that feed's getting to you. I think he said it was about 10 minutes. All right. So, anyhow, there's Eric Moto over there. Hey, Eric, how's it going? So anyway, top of the hour, 2 o'clock. Thank you, Bobby. They said they could hear that. At the top of the hour, the market may react in knee-jerk reaction. You'll maybe see a giant movement one way up or one way down or whatever, and then it'll settle back and return back. Don't expect it necessarily because it shoots to the moon or falls to the basement that's the way it's going to stay. It may very well. You just don't know. And then once the market settles down about that time at 2:30, the Fed chairman takes the podium in a live broadcast, and we will watching that live with as it happens. And the market will be volatile again after he'll read a statement for 5 minutes. You'll probably see something. Once they start asking questions, you'll see the market react to some of his statements, some of his specific words that he may say. Now, don't get me wrong. The words that come out of his mouth, he carefully chooses, right? This guy's no dummy. You can't be to be in that job position. All right, whether you like him or not, it's a different story. But what he says will move the markets, has the potential to move the markets. So what we'll try to do is interpret what's been said and why the market's doing what the market is doing as much as we can. Don't claim to be an expert, but we'll try to listen in and catch that. So I won't be doing a whole lot of talking the first minute or two after 2. I know that's hard to believe. Mark's not going to talk for 2 minutes. He'll explode. Yeah, probably will. But anyway, we'll try to listen to what the guy's saying, right? So,
CNN said the Fed is expected to cut rates today,
well,
but that's
everybody, the whole market knows that, right?
Yep.
CNN just now figured it out. What's it tell you about them? So, sorry. No, that's just a generally accepted consensus. What's going to happen, right? So, but it's not so much what we expect to happen. It's what he's going to speak about the future, what his statement will say about further cuts, if any, right? What's their expectations on the economy, to be good, better, to be worse, to be flat, whatever. You'll hear a lot of things, right? And they'll talk about credit easing, where they issue treasury bonds to, deal with our debt in our country. You'll hear them talk about that probably. And those are all different phrases they are looking for, and it will potentially move the market. So we have about 5.5 minutes or so before that happens. It will happen precisely at 2 o'clock. The markets will move before we actually will hear what's said, because they get instant access where we have to wait a few seconds. So, and we have to wait on the gentleman on my Bazinga to read off what they said. So we will be watching that. That Bazinga actually looks like this here. Let me see here, show you. This is Bazinga Pro. It's a news feed, and I can have, let me move this out of the way here so you can see. This is all fully customizable. You can get more stuff on here or less stuff, whatever you want. So I have like stock spikes. I use that in the morning in the pre-market. Here's market movers, the ones that are moving percentage wise. Here's news feed about everything and anything. And there's some more news feeds over here. Earnings, there's all kinds of things I can do. I can come over here and click on this, and it'll pop up the chart and additional information of this company. If I wanted to know more about Abercrombie Fitch, I can click on that. It gives me all the key financials. There's all kinds of stuff this thing does. It's a pretty amazing tool. It's a subscription based. It's not inexpensive by any means. So, and it's all customizable. You can put more or less. I have mine. I took a bunch of stuff off mine. So, But it has the Squawk Box feature for the Bazinga Pro members, of which I have right here. And we can listen to stock feed. You can listen to this all day. A guy will get on there when things come on. He'll just say it on there. He'll read off the news wire stuff or company earnings or company news things. So you'll hear him talking here in the background. So I will be actually shutting up here at 2 o'clock. We'll hear him talk. Hey, just sell it from up there in there. $100 he's wearing a purple tie. Really? I'll bet you 200 he's wearing a purple tie. How's that? We looked at that. He always wears a purple tie. All right. EWO indicator question. What decided to enter on the second tick once it flips? Well, good question. What's happening there? Let me pull that up here. Try to explain this real quick. The reason we wait on the second bar, and I don't have let me pull this up here. Add that on because I turned that off. All right. So on an EWO, the question is, why do we wait on the second bar? Let me expand this out so you can really see it. The entry point here also coincides with the change here, right? So we can get in on the first bar, but it can collapse on you. So what it's doing was when the 21 and the 55 and the 9, hopefully 9 sometimes is later, crosses over, that's a signal that the market is changing, that it's changing direction. It's going to the downside. Doesn't tell you how far down it's going. It's just saying the trend is changing. It's now the trend lines of the 9, the 21, to 55 are crossing over. You can see that right here, right? And that's usually a pretty good entry point. Now, again, you got to evaluate the big picture, what's going on with your chart here and all that, right? So by waiting, you allow this to form. I can get in early. I can get in anytime I want. I can get in over here on breaking hold of the 9, which I do all the time, right? But by doing this, it's just a little bit more conservative because sometimes these won't cross over. Somebody will come in and start throwing a large bunch of orders in, and it'll go right back up before it can complete that crossover. So by waiting for the second bar that's larger than the first, it's not always the second bar. It could be the third, fourth, or fifth bar, right? Like this one here, it's flat, right? Essentially flat, so it didn't really do anything. One here red and went right back into green, right? So that's why we wait for the second one, because this can change at the last second if a bunch of orders come in and can push it the other way. So it helps preserve your account by waiting that extra minute or two before you enter. And you'll find that you won't regret it. Now, do I enter earlier? Yeah. I mean, that's up to you if you're going to do that kind of play, right? So follow his trading strategies. Why? Because they work. That's why. I know they work. I've proved they work. So good question, though.
1 minute to the Fed rate decision.
Oh, sorry. Well, sorry.
Socials cannot see your screen.
Yeah, I forgot to switch back over here. Hang on. I just noticed that. Sorry. Anyway, let me point it out real quick here. I'm not without the explanation. So by getting in on the second bar, there it goes. I only got less than a minute. So by waiting, this is a 1 minute chart. Let's just pretend that's a 2 minute. I'm not changing it now. By waiting to the second bar, you gives this time to cross over here, right? If you do it in the first bar, these things on order can come in and then it can kill this EWO. So that's why you wait on the second bar, even though that's on a 1 minute chart. All right, I'm going to shut up. We're going to listen to see what he says, watch the market's
30
reaction.
seconds. Ten seconds. Fed cut key overnight interest rate by 25 basis points to 3.5 to 3.75%.
Only
Projections show
25.
125 basis point cut in each of 2026 and 2027. Again, 25 basis point cut and expected 25 basis point cuts in each of the next 2 years. Fed voted 9-3 for the Fed funds rate action. S&P futures getting a pop here now following that report. Fed signals a rate cut pause by adding extent and timing to describe its approach to additional adjustments to policy rate. Said the economy has been expanding at a moderate pace. Job gains have slowed and unemployment rate has edged up. The economy has been expanding at a moderate pace. Job gains have slowed. Unemployment rate has edged up, according to the Fed. Fed's Goolsbee and Schmidt dissented in favor of no cut. Marin dissented in favor of a 0.5 point cut.
So we got some dissension in the files.
Fed officials see core PCE inflation of 2.5% next year, unemployment 4.4%, and GDP growth of 2.3% in 2026. S&P futures now at 68.60, up 12.
So they do expect a quarter tick next year. Is that what he said? Just one? Or next quarter?
Coming up
He
at
said
2:30,
something about
Chair
2
Powell
years.
with the FOMC press conference.
That's not very bullish.
No, I thought he said a quarter point next year and in the following year.
Yeah, that's what I heard.
You said a couple quarter points on the next couple of years. I'm like,
That ain't
that's not
nothing. We expect that much every quarter.
right.
Exactly what he said. Quarter point 2026, quarter point 2027.
That's what I thought he said. That ain't good. Why is the market going up? Anyway, it is what it is, right? But
Well, it is
one
coming
thing
back
I
down.
did hear, there was more dissension amongst the other governors, right? It wasn't like a unanimous. I mean, they've arrived at a consensus, obviously, but they were also on the record. One wanted no, what was it? Two of them wanted no cuts. One of them wanted a bigger cut, and whatever, right? So they're getting a little bit more vocal. They're jostling. Well, and here's another thing. If you want to read between the
S&P
lines,
futures pulling back now, giving up a lot of its gains, up about 5. The Dow futures up 204, NASDAQ down 64. Crude is up 7 cents now at 58.32, following the report of the Venezuelan oil tanker seizure by the U.S. Navy. Gold is down $12 at 42.2390. Bitcoin futures down 1,000 at 92,345.
yes, apparently we seized a tanker. So that won't go over well. Oh, wonder what gold will react to that? Well, I don't know. We'll see. Is that considered conflict? See a tanker? Don't know. You'll have to evaluate that. You see, gold also reacted to the news, right? Because gold runs with fear, right? It shot up. Now it's pulling back, right? So it came in as expected this quarter. It's the future ones that's kind of concerning to me personally.
Well, the pullback might have been the reaction to that too, Mark, somewhat,
Yeah.
because it's kind of right back to where gold's right, really back to where it was
Look at me.
earlier,
Mm-hmm.
although above VWAP now, thank God.
Yeah, it definitely doesn't look bullish at all. Does not.
All right, so that was our initial here. All right, now at 2:30, we're going to cover the news conference. We'll watch it live. You can watch it yourself on the YouTubes. The Federal Reserve has their actual own website that they will be broadcasting it directly from. The reason I'm going to use the YouTubes because the Fed government site is a typical government site, and it gets flooded. The resources are low, and you could lose your connection there and you can't get back in. So I just skip going to the government website because it's just as typical. Not enough resources and all that jazz. So I'll just go ahead and, even though the YouTube will be delayed a little bit, it's close enough, right? So anyhow, that's how that works. So By the way, intraday margins are going to be high, especially most brokers. I know Weebles is high for 1 o'clock to 3 o'clock, and I know trade of 8 is 4 times the margin requirement. So if it was $100 before the economic news release,
OCG shares halted down, continuing to fall here, $8.52, trading down 17% now.
yep. So right now, until this settles down a little bit, the margins will be higher. Weebles till 3.
After hitting a high
Trade of
over
8 will drop
$19.
theirs, but theirs is 4 times the normal.
That's
So if it
Oscar
was
Charlie
$100, it's now $400 until they decide that that's been lifted. So watch your broker. Individual brokers will usually raise the rates on these type of meetings. So if you found out it's saying, oh, you ain't got enough money to do what you normally do, well, that's because it increases either to the overnight rate or just plain and simple. They just multiply it by X amount of times, like Trade of 8 does 4. So, and I forgot to bring another cup of coffee down with me. Questions, comments? So it's kind of a nothing burger in relationship to everything. It's not, market's going to do what the market's going to do now, pretty much, right? They already knew it was going to go down 0.25%. And that's kind of what it's doing now, right? So, questions, comments about that? Next big event here is at 2:30, and you'll see the market move because of that also. Once he starts running his yap.
How you doing, Mark?
Going good? The markets here, ES, just kind of putting around a little bit, really. This is a very volatile time to be trading. If you're not an experienced trader, you should not be trading during the FOMC meeting days. It's a good way to wreck your account in one fell swoop. Don't do it. It's not worth it. Sit on your hands. All right? So.
Mark, I have a question.
What's that?
When you trade on your contracts and the futures, you do market in, market out normally?
Nah, all the time. I don't do limit orders. I got time to piss around with that. You get better fills if you do limit, but then you might not get filled at all. I do 100% market orders.
Do you have a
Good question.
stop in?
Do I do what?
Do you have a stop?
Always have stops. Never trade without a
IRBT,
stop.
iRobot, moving back over $5.
Never trade without a
The
stop.
high's now at 43%.
Right.
Romeo Bravo Tango.
I'm going to mute that guy here.
Give
me a minute here.
What did you trade today?
What did I trade today?
Yeah.
I did a little bit of YM, but not very much. I didn't trade much today. I did a lot of trading in the pre-market this morning, pre-market stocks.
Also.
I did very well this morning pre-market, and I'm tired. I want to go to bed. I want to take a nap. I can't wait till the day's over. One of them kind of days, right? I'm sleepy. So, I just wasn't, I did well this morning, and it was just kind of enough to, all right, good enough for me, right? I'm done. I was happy, right?
Awesome, PTO.
Made enough to pay the electric bill, so that's all that matters, right? A little bit extra left over. So, no, I made more than that, but I'm just saying, I did okay, right? And I just kind of wasn't motivated, and I was paper trading, kind of half paper trading, and I was making money, and then it gets stopped out, and I just got tired of that. Low volume this morning in the futures market, so I didn't even trade. I think I made, it was either 2 or 3 trades in futures this morning. The volume was so low, I had green trade and then had red trade because of low volume. It bottom dropped out. I mean, I knew I shouldn't have been trading with the low volume as it was, especially on gold. And then I went and I traded, know if I did NQ or ES. It was one of them two. It might have been ES. I normally trade NQ, but I think I did ES maybe. I can't remember. And at least I got my money back and I come out $4 or $5 ahead. It wasn't very much. So I said, heck with this, and I, whenever the pre-market opened at 4, went out and hung out with them guys, and we traded stocks I never heard of before, and did very well on them. We had some good runners that were 250 plus percent gainers this morning, starting at 4 a.m. because we start training and trading at 4 a.m. every single day. We're for up to 12 hours a day. Our Diamond members get that from 4 a.m. to 4 p.m., 12 hours a day, Monday through Friday, along with our VIP and VIP Gold members. And then also on Saturdays, we have Saturday training, and Sunday we also have training. So we have live Zoom training 7 days per week here at American Dream Trading. Now, Saturdays, it's 2 hours, maybe 3 hours, 2 to 3 hours. Sunday nights, it's probably a good 4 hours at least anyway, depending on what's going on. If the markets are really taking off and things are really moving, they'll run it longer. If it's a dead night and on Sunday nights, then they'll just kind of stop it a little earlier. But anyway, we have it 7 days a week. There's nobody else here around that does that kind of thing other than American Dream Trading. So head on over to our website, get those memberships. When you get to American Dream Trading .com, you will find the link there to all our different membership packages. You can look at them, compare them, decide which one you want. You can do monthly payments, semi-annually, annual payments, and also with the biggest discount annually. We also have some packages that we are also running, and we have also 3 of our programs on a 7-day for absolutely free trial. We have the premium, which is Training and Trading with Coach, from 8:45 a.m. through 4 o'clock p.m. That's with Coach and the other training moderators. We have the crypto, which is on Wednesday nights at 7:15 p.m. Today is Wednesday, so the class will be tonight at 7:15. If you sign up for that absolutely free crypto 7-day membership, you can join them tonight at 7:15 p.m. And you can ask all the questions you like and learn and everything there is about crypto. And then we have the free 7-day futures membership. And we start training and trading at 8:30 a.m. Now, we are actually training and trading 23 hours a day, essentially. All the memberships come with their own Discord channels where you can talk to people specifically within your membership level, and you have your own training aids and all that. So, obviously, the Diamond membership is our all-inclusive. It's $12,000, one-time payment, never ever pay again, includes all of our membership. Stock options, crypto, futures for lifetime. You never pay anything ever again for your lifetime. So obviously they have access to every single channel that's there. The lower level ones only have access to theirs. So every membership level you go up, you get not only access to that new level, you still get to keep the membership level of the ones below you. So it's a pretty good deal. So good, KB. Good to see that. Good job. We got members over here making money on these trades. So that's how we do it. So you can find all that. Now, you also need our free Discord. It's absolutely free. Always has been free. Always. When do they ask questions? At 2:30. Pay attention, Matt. After his news call, after his reading the statement, about 2:35. And get that free Discord, because you have to have that to get our daily live Zoom links for you to be able to get into our training, because those change every day. So you need to get in there and get that also. So head on over to our website, American Dream Trading, and get signed up for all those different packages, whatever one you think you like. Has Tradeovate, by anybody know, gone back to its standard yet? I don't know. Let's see here. FOMC news are popping up. It's Fed, Chicago Fed and Kansas City Fed dissents. They wanted no change in the policy. Fed Governor Rand wanted a 0.5 point. That's that news blurb. Let's see, what would the other one say? I closed both of them. Dang on it. Anyway. Oops. Let me go one of these here, see what pops up over here. There we go. So the Chicago and Kansas City, one wanted it kept. Let's see, this one here is committee judges that the reserve balances have declined to ample levels and will initiate purchases of shorter term Treasury securities. So they're sufficiently, the reserve balances are good. In other words, they're not worried about paying down more debt. It's already been taken care of. They don't need to issue longer term bonds, is what they're saying, right? Treasury notes, that type of thing. All right, what else we got here? That's on silver. What else we got here? Any other news? Nope. All right. I wonder if there's a way to bring up that news feed here so you can see. Let's see here. It's over here. Community calendars, screener, products. Anyway, so that's the news right now. Here in about 15 minutes, we'll be listening in live on the Fed Chair's press conference. Questions, comments about what happened, what's about to happen?
Hey, Mark, Trader Vape. I have a problem snapping the line. Maybe I'm doing it wrong on the line thing on here. Like a lot of them, you can just hit it and snap it, and this one you gotta like pull it. Is that true?
Yep, that's
No.
correct. Their charting sucks.
Yeah, I don't like it at
No,
all.
it's meant just for at the moment kind of charting. It's not for long term and in there. That's why we highly recommend you use something else to do your charting on, such as TradingView.
So how does trading hook up with TradingView? You gotta have the money in TradingView? Or
No,
I don't get
no,
it.
your broker is Tradevate.
Right?
Put your money with them, and then once you have a funded account, you can go to the bottom of your TradingView program, which is what
And
you
hook it up?
Yep, there's just a simple little button down here. I'll show you. Look at the bottom of my screen. All
Yeah.
right. You come down here. Let me log out. It'll show you all your brokers. Right here.
Yeah.
It's not the whole list. You can click down here and it shows them more.
Mm-hmm.
So whatever one you have, like if I want to hook up my Tradevate, you just put in your credentials the first time. See, I have all my credentials already in there, so it always does that. I can do the live. I can do paper trading, do demo, and just connect. Bang, bang. And right there it says I got my demo account on my Tradevate, and I can paper trade all day long if I want to. Or I hook up my real account to do real-time trades. And you do that with the other brokers that are eligible to participate.
That's TradingView?
TradingView.
Okay, thank you.
Daniel, I use the link in the website, in Coach's website. It's a must-have. I traded without it for 2 years. I wish I knew a long time ago. It's a must-have to trade with TradingView.
Anybody notice this new tab, this new button up here on TradingView? I don't know when that popped up. I think it was yesterday I noticed that. Up here in the upper right-hand corner, see that? It says trade. Instead of having to come down here and hitting this to open up your tabs over here to your trading widget, you just go right up here now, top right-hand corner, bang, puts it right there for you automatically. Oh, that's pretty cool. Only problem is you don't click it again, doesn't close it. You have to click the X.
Isn't that
I don't see that, Mark.
What?
Yeah, you're on Windows, right?
Well, this one is.
On the Mac.
Yeah, Mac's doesn't show it that way. I don't see it.
Yes, it does. I got my Mac right here in front of me. It has the
Oh,
exact same
I found it. Never mind. Wow, cool.
Your apologies accepted. No problem.
Yeah, that's cool.
Mark, isn't that a Tradevate emblem within that widget or within that little button?
Yes. Well, you got to have your account hooked up to it.
Yeah, it'll be whatever broker you have hooked up.
Yeah. Right now, that one's on paper, right? I'm reading this news here. Committee is attentive to the risks of both the sides of its dual mandate, in other words, unemployment and bringing interest rates down. Downside risk to unemployment rose in recent months. So they're worried about unemployment still. All right, that's what they're saying in between the lines. Markets don't seem to care. Yeah, whatever one you are linked with, like here, it says it's got the Tradevate symbol, right? Because that's who I'm logged in with. If I come down here, let me log out of this. My guess would be, right? Log out. Let me log in with my Weeble account. Okay. I can do this, connect. Now I'm going to have to go through all this crap, and I ain't doing this live here. Yeah. Well, I'm not going to hook up to that live because I got to go in there and redo that. So whatever broker you hook up with, that's what's going to show up there, right? If I do paper trading, just regular straight through Weeble, you can see it just says Trading View, right? Through Weeble. See how the logo changed up there? It's got a little TV there now. As a Trade of
Yeah, I
Eight.
just started with Trade of 8, so I thought maybe that was something that came with the Trade of 8.
Yeah,
Sorry.
no, it's just, here's a Trade of 8. Switch to Trade of 8. And see the Trade of 8 logo appears now in that trade button. Shows which one you're even connected to. I mean, it tells you down here at the bottom of the screen anyway. So you now have two ways to open up that, another way. I can come down here and hit this button, open up the trade widget, and I can come up here and just hit that. Bang, I like that better. I don't have to reach all the way across my screen if I don't have it open, right? And I'm bang, bang, ready to go, right? Very good. Very nice. Oh, it ain't always been there, Trader B. Couldn't have been. I'd have noticed it because, I'm very observant. Has it? Has anybody else noticed that before, or am I just now noticing it? One at the bottom is there. I don't know.
It just came a couple days ago.
Yeah, that's what I thought. I think it was yesterday when I noticed it or something. I don't know.
Yeah, it's new.
Trader B. I'm gonna get him tomorrow morning. Trader B. Huh? Oh, he says my apologies. It is new. Yeah, you're welcome. Yeah, I don't know. I think it was yesterday when I finally noticed. It could have been there for a week for all I know. I'm like, oh, look at that. And I finally clicked on it and it popped up. I'm like, oh, that's cool. It's just like these buttons over here. I don't like using these either because I got to reach across my screen. Yeah, it's just a quick flip of your wrist to do it, but it's just, I don't know. To me, it's just inconvenient. All right, so we have about 8 minutes. I can't believe I came down here without coffee. What's the matter with me? I will contact the maid to have her deliver me one. What do you think about that?
You're going to get in trouble.
I think you're going to get that coffee straight to the head.
She doesn't watch your show, I take it.
We're going to be sleeping on the couch today.
That's if you can make it to the couch after you take a couple steps.
How you doing in there, buddy?
All right, we'll see. I have so ordered my maid to maketh me a cup of coffee and bringeth it
money,
to
buddy.
me.
And you
This
said
show may
ordered?
abruptly end without any notice.
Mark, we still have an hour and a half for the show, okay? So
Okay.
I'm looking in the background for the bat for the back of the head, so.
For the money you're making, you can have a lot of maids.
Yeah, that's okay. Enough trouble with one woman. I don't want a house full of them.
I'm thinking a little rat poison in the coffee. That's what I'm thinking.
Yeah. She could be making me a cup of coffee while she's in the kitchen, make me a sandwich.
you're right.
I'm thinking the same thing, Tex.
Hey, you know what I'm saying? You know what I'm saying?
Yeah, she probably won't even see it. She don't hang out around her phone anyway. She probably won't even see it.
If I can say something, me and my wife actually talked about this whole maid thing. My wife told me, whenever I start making money like Mark does, she said, I'll be calling you, do you want coffee and sandwiches?
Yeah. Yeah, well, the problem with me getting, and I've offered to do that, and I already know there's no way she would allow some other person to come in and clean her house, right? And even if I could talk her into it, she would clean the whole house before they got here, right? I can't let somebody see the dirt in my house, right? None of that kind of thing. She's just
That's what I used to do when I had somebody come and clean. I cleaned before, yeah.
Yeah, she's just that way. That's all. My mom was the same way. It's like, ain't nobody cleaning my house.
Trump's going to be speaking soon.
Who?
Mr. Trump, your president.
Oh, yeah. Can't keep him down. Surprised he probably ain't tweeted already. Probably has.
Double whammy.
Powell generally speaks, but Trump's going to?
Yeah, she ain't even looked at her phone. Oh well, I guess we'll just have to rough it.
I'm sure that's what she wants you to believe.
All right, let me switch screens here. I'm all set up to get the YouTube thing up. Let me get this up here. Let me switch this here. Wrong button. It's this button. Let's get the Federal Reserve up here. There's the link. It's the actual Federal Reserve YouTube page. It's official. The authorized version. Oh, look at that. The government even gives us music to listen to while we're waiting. Isn't that nice of them? Yeah, well,
I paid for that music, Mark.
I did too. Thank you for paying your taxes. We'll just go ahead and mute that for now. Or did I stop it? No, I stopped it, didn't I? Stop it. I want to mute it. There. Now it's muted. All right. So the next 3 minutes or so, if they start on time. All right. So we will be listening. You can watch the market move one way or the other. They didn't seem to get too excited about it.
Don't forget your screen, Mark.
Forget my what?
For Zooms. Are you going to put the screen up?
Yes, thank you. Let me switch that screen for those paid members so they can see what they're supposed to see. And that would be that one right there.
Yada.
That's a good thing I told you to remind me, huh? You know I can't remember yesterday, let alone 5 minutes ago. Come on.
Exactly.
All right. Yeah, this will just be Powell at the news conference with anybody. He'll be taking questions from the reporters. I like listening to the reporters' questions. I find it amusing. Uh-oh.
Uh-oh.
I hear footsteps.
Gold doesn't like something.
Well, the markets are pulling right now anyway, so slightly. So we got about a minute and a half for the scheduled start, if they start on time. They usually do.
104 ticks. 91 ticks. Damn. Hello, 120.
So we'll try to interpret what he's saying as he says it. One of the things you will hear him do is talk out of both sides of his mouth. Well, this is bad, but...
I think till Thursday, that's it.
Yeah.
Yeah. He's on his way here now. Yeah, he was in Fort Collins, so I don't know where he was, but he's coming back here. He's coming back to beat Richie.
KB, open my...
Sorry about that.
This will be the live news. This will be the live newscast of the, as you can see. This will move the markets over the next probably 10 to 15 minutes. At least the next 15, if they're going to move at all.
So, Mark, tell me, when did you start to up your contracts?
Well, I don't know. I'd have to review. I started out with one and just kept working my way up. It was more comfortable. I started 1 micro, went to 2 micros, went to 3 micros, went to 5 micros, and then went to 1 E-mini, did 2 E-minis, 3 E-minis, 4 E-minis, on.
What's the most? 500?
No, 100. Well,
100.
I think I did 300 once, very briefly, like for seconds.
It didn't.
Like for
it
seconds.
Didn't.
Here he comes. All right, let's listen in.
Yep.
Purple tie.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
Closed captions on.
Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening.
You know what? The government and economy still work even though the government was shut down.
The median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months.
So now he's blaming immigration
in our SEP,
for
the
jobless.
median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based
Oh, so
measures.
the tariff's working. Oh.
Most measures of longer-term
okay.
expectations
So you're saying he
remain
was right?
consistent with our 2%
Oh.
inflation goal. The median projection in the SEP for total PCE inflation is
Imagine that.
2.9% this year.
Look at the market's
and
taking off.
2.4%
Yes to the
next
moon.
year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a 1/4 percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement, or repo operations, are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning and should be used when economically sensible. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right, here comes the questions. I did get my coffee, though.
Thank you. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now too. So it's partly that consumer spending has held up. It's been resilient, and it to another degree it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive. And as I mentioned, AI spending will continue. The consumer continues to spend. So it looks like the baseline would be solid growth next year.
Steve.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment in the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down, and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a whole lot of big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment? Thank you, sir.
So the implication is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time. So it's basically a good thing. But that may be that's certainly the implication.
The horseless carriage came around, right?
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the 2 official dissents against the cut, but there were also soft dissents from 4 others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me just say, as I mentioned, and as I've mentioned here before, the situation is that our 2 goals are a bit in tension, right? So interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you,
one without screwing up the other one.
Where do you think the bigger risk is, and you know, it's very unusual to have persistent tension between the 2 parts of the mandate, and when you do, this is what you see, and I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views, and you know, we come together and we reach you know, a place where we can make a decision. We made a decision today. We had, you know, 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, you know, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and, you know, the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in you know, inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile, but distorted, and that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey, we're gonna look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. I mean, you talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive, either to, you know, the Fed's communication and the messaging around the policy path forward?
I don't feel that we're
Who
at that
wants
point
to have
at
all yes
I
men on their
would
board,
say,
right?
again, these are
wants that.
good,
You
thoughtful, respectful discussions.
You need the dissent
and you hear people say, and you'll hear
to discuss the other side of the table,
say the same
right?
thing.
You
I
can't
could
have
make a
everybody
case
just,
for
oh, yes,
either-
sir, we'll just do it your
for
way.
either side.
That
I mean,
doesn't
I
build
could make that case.
any
It's a close
corporation in
call.
America.
We have to
let
make
alone
decisions.
anything government, right?
And we
You
always
need
hope
people
that
to
the
speak
data
up and
will
dissent,
give us a
right?
clear read.
If people would have
But
spoke up
in
more,
this
we wouldn't have had
situation,
the space
you
shuttle
have
blow up, right?
competing-
There's an instance right there, right?
If you look through the SEP,
I
you'll
realize
see
this
that
is government, but it's still
a very
business.
large
It's
number
ran
of
like that,
participants
right? You
agree
need to have dissenters.
that risks are to the
Give you the
upside
what
for
ifs,
unemployment
right?
and to the upside for inflation.
I worry
So
when
what you do,
everybody
you've got one
agrees,
tool, it can't
no
do two things
dissents.
at once. So
You
at
should,
what pace
because that's
do
what they
you
want,
move?
a world where everybody
what
just
size
follows
moves do you
and
make and that
agrees.
kind of thing, and what's the timing?
they're going
it's,
for.
It's very.
I
It's
mean,
a very
obviously, there's going to be
challenging
times
situation.
where everybody's in
I think we're
100%
in a good
agreement,
place
but
to, as I
if that
mentioned,
happens
to wait
all
and
the
see how
time,
the economy
that's not a
evolves.
good thing, right? Why do you think we have a two-party political system, right?
I agree when my wife agrees with me.
Yeah, exactly. and our relationships,
Tim
right?
Rose of the Wall Street Journal.
Yeah, well, it's a healthy
Chair Powell,
thing.
there's been some discussion recently of the 1990s. In the 1990s, the committee did 2 discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
So I don't think that
Does anybody recall since COVID how many
rate hike
points
is
it
anybody's
has
base,
they
is
raised
the
the
next
rates?
thing, is anybody's base case at this point, and I'm not hearing that.
Anybody know?
What you see
First
is
answer wins.
some people feel we should stop here.
I didn't hear the
and
question.
we're
I
at
just
the right
walked in the
place
room.
and
What'd you
just
say?
I said, how much
8,
did the
Mark.
Fed
we should
since
cut
COVID
once
raise interest rates?
or more
8 times.
next year. But when people are writing down
5%.
their
At least
estimates of
500
policy
basis
to go,
points.
it is either holding here
And
or
and he's bragging, and
cutting a
we've
little or
reduced
cutting
it
more than a little.
0.75.
So I don't see that as the
Okay.
base case as involving that. So of course, a data set of 2 now 3.
I mean, it was
is not a big
5.25%
data set, but you are right about those
2023, so
3
just
cut
summer, July.
times in the 90s.
So, yeah, I mean, we are bringing
If
it
I could
down.
follow up, the unemployment
Right.
rate has been rising very gradually for the better part of 2 years, and indeed the statement
They
today
have been dropping it.
no longer
Working our way
describes the
back down.
unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the notwithstanding the 150 basis points in cuts prior to today?
So I think
we've
the
got
idea
1,
is
2,
that with
3,
now having cut
4,
75
5
basis points more now and having policy, I'd call it in a
They
broad
started
range
September
of
18th,
plausible
24
estimates of
dropping
neutral,
rates.
that will be
So
a place
there's
which will enable the labor
1%,
market to stabilize or to only
1.5%,
tick up 1 or 2 more
1.75% of the
temps. We won't
5% that
see,
they raised it up.
Not
even
any kind of a
2%
sharper
has
downturn,
been
which we haven't
lowered
seen
back
any
down.
evidence.
I'm not saying
of
that's a
at
good
all.
thing
At
or
the
a bad
same
thing. I'm
time,
just saying, right?
Policy is still
It's not, of
in a
course, never
place
anything goes
where
ever goes back to where
it's
it was
not
at, right?
accommodative,
But
and we
just
feel
saying.
like we have made progress this year in non-tariff related inflation, and as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but
I'm gonna
we're
wait
going to
for one
start
more
to see
question, and we're gonna cut
the
this
data,
off.
and it'll tell us whether we were right or not.
These are the big name reporters. Now we'll get to some of the minor ones.
Claire Jones, Financial Times.
Okay, I
A lot
forgot.
of people
She's coming
interpreted your
in.
comments at the October meeting that, when there's a foggy situation, we slow down, to mean that, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would say point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month.
Their own reports.
And also, just to point out one other thing, surveys of households and businesses both showed declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought. In terms of inflation, it's going to come in a touch lower, and I think the evidence is
They lowered
kind of
the rates
growing
back down, by the
that
way.
what's happening here is services inflation coming down, and that's offset by increases in goods, and that goods inflation is entirely in sectors where there are tariffs. So that does build on the story, and so far it's only a story, that that the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs, And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things, and we say that this was a decision.
I always think about that guy.
It obviously
Guns,
wasn't
bullets, okay. I don't need anything else. I can get that. Overall, that was the judgment bullets, that we made.
And just on the ample reserves point, how concerned were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in reserves, in an ample reserves regime. So, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, if you look ahead, you will see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20-25 billion per month. So that's a small part. That's going on. It's also happening in the context of a temporary few-month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrew.
Okay. This last
Thanks,
one.
Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew.
It's a stupid question. What's that got to do with it?
We're not legal commentators. It's before the courts, and we
See
think
what I'm telling you?
we don't think that we
Sure,
have
we're all
controversy
super
to engage as a public discussion of that. I'll give you a
Who
mulligan.
wants to know about the Supreme Court ruling against against what's going on over there?
Just one more.
I guess I wanted to come back to the 1990s question, and do you see that as a useful model for thinking about what is happening in the economy right
Washington Post trying to stir up controversy. Doesn't have anything to do with the interest rates or anything he's talking about. Anyway.
Drama.
Where we cut 3 times, but this is such a unique situation. This is.
So anyway.
It's not the 1970s, let's put it that way, but we do have tension between our two goals. And so that's just unique in my time at the Fed, and I think going back a long ways, we haven't had that. In our framework, as you know, says that when that's the case, that we try to take a balanced approach to the two things, and we look at how far they are and how long it would take to get them back to each of them back to the goal. And that's a very subjective analysis, really, but it just tells you you've got to. And I think ultimately what it says is when they're broadly equally threatened or equally at risk, you should be kind of neutral, because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end of the range of neutral, I would say, and that's what we're doing now. It so happened that we've cut 3 times. That we haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
Edward. Thanks, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, it takes, there's the announcement of a tariff, and then there's, they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of the, it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. We haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this. And after that, again, if there are no new tariffs that are being announced that will take 9 months to get fully in, and 9 months is also an estimate, then you should start to see that coming down in the back half of next year.
And I want to see if I could address sort of the elephant in the room. The president's been talking openly about a new Fed chairman. Does that hinder your current job right now or change your thinking at all?
No.
Well, it doesn't matter. You're on a term.
Another great question. Crying out loud.
That's like asking the president, are you concerned your term's going to end in 2 years?
10-year
What? Come on. You had one question to ask him, and you asked him that dumb question? Come on.
Basically has been steepening.
This is what I love.
Why do you think
the gossip
I love commenting on the questioners.
the absence of data
Just revoke the press credentials and get it over with.
Yeah, exactly.
The economy the
If you
most.
can't answer a fourth-year journalism
we're
question,
looking at the real
then
economy and
you're not
focusing
allowed
on
here.
that. And you've got to, when the long bonds move around, you've got to look at why they're moving around.
That
If you
I
look
do
at
like
inflation
Powell about that when
compensation,
he's asked about
it's
what
very
the president thinks of him
that's
or whatever. He's
part
like,
of it
go Powell.
is inflation compensation, break evens.
Anyway.
And they're at very
All right,
comfortable
I think that's
levels.
enough of
They're
that for
levels
now.
Consistent once you get out past the very short
You could sit here and
term,
mock the journalists, but
break evens are at at quite
pass.
levels that are quite consistent with 2%.
That's
How about
too
one
easy.
more? One more, because now we're getting into the
With rates
lesser-known
going up
journalists. Let's
out
go
there
one
that
more.
Suggests concern
All
about
right,
inflation
one
in the
more.
long term or anything like that. I mean, I look at these
Mr.
things.
Chairman, how many
I know
purple
the same thing
ties will you
surveys.
be wearing?
Surveys are all saying
Yeah.
that.
Why do you wear purple ties?
I like when they ask Trump a stupid question and he's just like, "You're an idiot." He says things like that to them. I'm like, well, "What is wrong with
Powell
you?"
says the same thing, but he says it in a nicer way.
An
He's more eloquent about it.
or something like that, and that's
It's more
a lot of what's
entertaining
been going
when
on.
Trump
You saw
says
a
it.
big
You know what I'm
move,
saying?
Know what I'm saying?
toward the
He
end
said
of
you're an
last year,
idiot, but the
which
way he
was
said it
not
was,
to do with
we
us,
don't
it was
comment
to do
on
with other developments.
judicial wall.
Well, you just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation as their number one concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people,
If you don't have a
instead
job,
of their
you can't
number
go
one
buy
concern,
stuff.
inflation?
So we, as you know, we have a network of contacts in the U.S. economy, which is really unmatched if you go through the 12 reserve banks. So we hear loud and clear how people are experiencing really costs. It's really high costs. And a lot of that is not the current rate of inflation. A lot of that is just embedded higher cost due to higher inflation in 2022 and 23. So that's what's going on. And so the best thing we can do is restore inflation to its 2% goal, and our policy is intended to do that, but also have a strong economy where real wages are going up, where people are getting jobs and earning money and we're going to need to have some years where real compensation is higher.
Problem is,
it's
if you have
positive,
too many people out there
significantly
spending
positive.
money,
So
then
wages,
that causes
nominal wages are
inflation
higher
to
than
go up
inflation
because
for people to start
the markets
feeling
will react
good
accordingly. They'll
about
keep raising
affordability.
prices, right? Because people are
Affordability
willing to
issue.
pay more because
And,
they got money.
so
So
we're
there's a balance
working hard
between
on
that. That's what
We
makes the
we're trying
job
to keep
hard.
inflation
Right?
under control, but also support the labor market and strong wages so that people are earning enough money.
But you
and-
don't
and
want to see
feeling
everybody working?
economically
Well,
healthy again.
Victoria.
There's a balance. Somebody's got to dig ditches, though.
Hi, Victoria Guida with Politico. Just to follow up on that, I mean, this is now the third time that you've cut this year,
Oh,
and
here's that one ought to be
inflation
good.
is around 3%. So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2% because inflation is relatively stable where it is?
Everyone should understand, and the surveys show that they do, that we're committed to 2% inflation, and we will deliver 2% inflation. But it's a complicated, unusual, difficult situation where the labor market is also under pressure, where job creation may
Doug,
actually
get
be
busy hiring
negative. Now,
people.
supply of workers has also gone way down,
I'm on
so
it.
the unemployment rate hasn't moved that much. But, you know, it's a labor market that seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force.
And as
to
you can
find
see, the
work.
markets are
So
reacting
that's really
positively
important
to
people.
this news conference.
The story with inflation.
It started climbing
and,
right at the
you
news
know,
conference,
We're
did it
well
not?
aware that
Right?
this is a story at this point, is that
Once he started
if
taking
you get away
questions,
from
about a
tariffs,
quarter till there,
inflation is in the low twos.
Initially, there was a reaction
So
about
it's really
maybe only
tariffs
having one or
that's causing the
or
most
less
of the inflation
cuts
overshoot. And we do
next
think
year,
of those
but
as
since
likely
he's been talking,
to, in the current
the markets have
situation,
calmed
as
down a little
likely
bit
to be
and things are
one-time,
going back up. So,
you know, one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path. If it was just inflation and the labor market was just really strong, and then rates would be higher, as they were for more than a year. You know, we didn't have to worry about inflation. Sorry about the labor market. Because the labor market, unemployment was very low, if you remember, when inflation was very high. There was a labor shortage, so we could focus entirely on inflation. Now, it's different. We actually have risks to both, and I think we're doing the best we can for people. They also care about their jobs. They do care about affordability, and the best thing we can do there is both to support economic activity, but also, you know, make sure that when tariff inflation goes down and disappears, inflation lands around 2%.
Elizabeth.
Thanks so much, Elizabeth Schulze with ABC News. Just to follow up, you keep talking about job growth being negative. Why do you think job growth is so much worse than some of the official data? Why do you think job growth is, to follow up on your comments about job growth, why is it so much worse than the official data is suggesting?
Oh, well, we know, I think I don't think this is particularly controversial. It's very difficult to.
yeah, goodbye.
Nice pop on
that
hold
one.
there.
That one there pushed me over the edge. So why is it controversial? Whatever. Come on, people.
Maybe because the whole economy's tied to it.
Yeah.
Idiots.
Anyway.
Oh my God.
Anywho.
That was a shit show for me. I never trade Fed, and I was trading, and I got knocked down for about $700. Got it all back. Stopped at minus $1.07 or something like that.
Huh.
And then my Wi-Fi freaking goes out right after when I close the position. And
what does Coach's rules say about
I
trading?
had a backup. I have actually a backup. I do.
What does he say about trading during this period?
Never, ever, ever. But I just wanted to. I just had to.
I'm not subject to them rules, so I'll just go ahead and throw my money down the drain. Is that your philosophy?
No. I lost $1, but I could have lost more.
You lost $1, but you were up, and then it lost it all, right?
Correct.
Oh, okay. So we already knew what the rule was, and we intentionally broke it anyway. You need to go.
I thought that was for new traders.
You
Mark.
need to
That's
go to
new
your room
traders.
and wait for your father to get home. Go stand with your nose in the corner.
Man, we care about you too much to let you do that.
That is funny.
Anyhow.
That's the first time Wi-Fi ever went out, by the way. For me.
I've had that happen to me a couple times. So
That scared the shit out of me.
Yeah. It does. I went running. I literally
heart
grabbed my
hits your
phone,
butt
went
pucker
running
down.
up the steps outside, waving my one hand in the air at the sky on my 2-bar cell service, trying to get out of a trade. And anyway, yes. Good to go. All right. So I don't know if you've ever been here with us when we've done that before, covered it. If it isn't, that's a new experience for you. This happens every FOMC meeting. They hang on Mr. Powell's every word. By the way, did I turn my camera back on, by the way? Yes, I did. As you see,
Yes, you did.
my maid brought me a cup of coffee down. Of course, she's not down here for hearing me say that, so.
Yeah, no kidding.
I'm sure the text was more like, honey, may I
Yes,
have a
thank
cup
you,
of
dear.
coffee, please?
Yes, she actually did. That was sweet.
Mark, you gotta watch that Key and Peele. They have an episode where they're hysterical.
Yes,
Huh?
I have a very good wife, so she takes good care.
The Key and Peele, he's like, yeah, so I told her, I said, bitch. And he's looking around first. He goes, I said, bitch. He goes, you really said that? He goes, oh, yeah. And then he keeps looking around. And then I said, bitch. But he looks around and makes sure she's not anywhere around. Huh?
Still a family show.
Oh, sorry. Bitch is just a female dog. That's all. Just saying.
Well, somebody just got a phone call from their school today about their kids saying that word.
Right.
Well, did you say that stupid dog? That's why.
Yeah, well, that's probably what he was talking about for sure, yeah. Okay.
My kid, Nicholas, when he was in second grade, the teacher called at night. And so I went in my room with the phone, and all the kids were like right at my door trying to listen. And I'm like, oh God, who's getting a call? What's going on? And she told me what he had said, and I can't repeat it at all. But I was like, oh my God, I don't know where he heard that. Well, I found out later. He said he heard it from his father, and I'm like, but I can't even tell you what he said. It was bad.
Anyway, back to the show already in progress.
Show in progress.
So that's an FOMC meeting. They release a statement or two, market reacts, and then it really reacts after the fact when they start asking him questions, right? Because now he's got to watch what he says. He don't know what they're going to ask. I mean, he's already got canned responses for it anyway. But like I say, he's an intelligent individual. You have to be to have that kind of job. As far as I'm concerned, I've said it in the past, and I'm not talking about this one individual here, the Fed chairman here, but the Fed chairman in general, to me, has more power around the world than our president does at times, because the words that come out of the Fed chairman's mouth can make the entire world's markets move. In other words, ours move, and then all the other worlds obviously react to it, right? So, out of his mouth can make the markets go up or make the markets go down. They can make billions be made, and they can make billions be lost in just one sentence said wrong, right? Now, obviously, world leaders have the same influence, right? But especially now with the internet, you can say something. I don't know, has anybody checked the tweets and see if the chief tweeter's been tweeting? I'm sure he has, right? So anyway.
I haven't, but I did watch the ATR and NQ during that thing, and before it went live, we were at about 60 on the 2-minute. Now we're 154.
Imagine that. Nice rise. Look at that. Isn't that a beautiful chart on NQ? I like that. That's pretty, right?
Is now.
Yep. Now see, all your margin rates went back to normal. So you're back to the normal thing. So anyway, too bad it wasn't doing this all the way. Now this should have a lingering hangover effect for the rest of the week. So don't just assume that just because this is over with, everything's hunky-dory now, right? Now, I'm not saying it might take off tomorrow, or it might drop like a rock, right? So that's basically what happens. He explained, and when he says the dual mandate, what he's talking about is the dual mandate is not only are we trying to bring inflation down, we're trying to keep people employed, right? The problem with having everybody, if everybody was employed and we lived in a Walt Disney World and there was no unemployment, no soup kitchens, no welfare, everybody was just all happy, right, and had great jobs, right? And they weren't all minimum wage jobs, and you could actually go on vacation, do what you want to do kind of jobs, right? Well, the problem is that floods the market with so much money, right? Well, if I want something, I'll just go buy it, right? Well, guess what? If I'm making widgets and I'm selling them for $1, and I see, wow, people really want this stuff, maybe I'll raise the prices, right? and that causes inflation down the road. So the market will do, the invisible hand, right? Adam Smith, is that what his name is? Adam? Is that Adam Smith? The invisible hand theory, right? And then at times when times are tough, the prices will come down, right? The market will bear what's out there for it. So that's the danger. What, buying stuff's bad? Well, no, it's good for the companies, but it drives prices up also, right? Supply and demand. We have the product, we can demand it, right? And if you got the money, you'll pay it. So that's the balance, right? So to get inflation down, actually unemployment's a good thing, right? Because it helps balance the excess money flowing into the markets. I know that sounds counterproductive and it sounds mean, right, in our own brains, but that's actually how it works, right? You got to control the flow of money. So what happens when people are spending, and this is how we got to where we were, right? What do we do to control spending? What do we do to keep prices from going up? Well, they raise interest rates. Well, what's that got to do with anything with it? Well, if you got to go get a loan to go buy something, are you going to want to pay a higher interest rate? Or if you're going to buy a new house and the interest rate's 25%, are you going to want to go buy a house versus getting one for 4%? Well, obviously not, right? Unless money's no object to you, right? Are you going to go buy a car for 18% when you can get a regular loan for whatever they are, I don't know, 4%? Of course you're not, right? So by raising interest rates, that helps curtail people from going out and spending on big things. Yes, you still got to buy groceries. Yes, you still got to pay for electricity and all the basic needs in our lives. You don't need to buy a new house. You don't need to buy a new car, right? You don't need to buy 50 pairs of tennis shoes, right? 50 pairs of pants, right? You don't need to. But you can if you want to, right? Because this country is blessed generally, right? So to offset the excess of spending, they raise interest rates to stop money flowing into the market on big ticket purchases, kind of thing, right? To slow down the mass accumulation of money. And then the markets react to all these things, right? Well, when things get out, we had COVID and that really screwed up things, right? So, we're not going to get into all that, right? But I'm just saying. So the problem is the balancing act, and that's why they call it a dual mandate. And this didn't exist until COVID, actually, or 2000. When did they adopt that dual? Whenever Powell took over, I think. To get people employed and bring inflation down without one screwing up the other. So there's a balancing scale there. You raise one too fast, the other one will go down. If you raise the other one up, the other one will go too fast, right? So it is a hard job. I mean, that is we consider an armchair quarterback, well, I should just drop the interest rates. I shouldn't have to pay 15% to go get a car loan. It should be 4%, right? Or whatever. And, we can do that. But there's that balancing ethic that they have to do those things. And why do you think our president's he wants them to do it, and he wants them to do it now, right? Well, I get it, right? And I'm not saying whether he's right or wrong, but that's why the Fed Reserve is independent of the president. Whether you agree that's a good thing or a bad thing, I think it's a good thing myself. I'm not saying how I agree with one side or the other, but I do believe they should remain independent. That way they can do their policies, and the judicial system and the
they are funny in the same room together, though. I love watching them together.
Yeah, so you have each branch, each executive branch implements policies, right? And then, legislative branch passes laws, and, they got to come up with, so everybody got to work together, right? And there's got to be a balancing act. And the Fed being independent, they can raise and lower rates however they want to, right? Really, ain't nobody can stop them, right? I
never said that, Mr. President.
Yeah. Yeah, so anyway, everything he says is recorded anyway, so you can misquote him all you want, but he's every business meeting that guy goes to, chairman, it's all recorded. So anyhow, it's an interesting problem, and it's not as easy as you think it is, right? I'm out of a job, I'm losing my house, I'm losing my car, I'm losing whatever, right? In your world, that's a bad thing, right? And it is a bad thing. I'm not saying it isn't, right? But there is a balancing act between having enough employment, right? Is there enough jobs? Can we get qualified? All these things add up. That's what grows our economy. And he did say things are getting better, right? So the economy's stronger, right? He's worried about the tariffs there, right? Tariffs are bringing in a lot of money, but to our economy, right? They're supposed to be paying down stuff. Now, whether they do it or not, it's a different story, right? So the tariffs are working on what they wanted to do. But even that sounds like a good thing, making other countries pay the high rates like we got to pay them. It still has a counter effect, right? Unintended consequences, right? So again, balancing everything's got to be, so you can see why these smart people we have in the world have to try to figure these things out. We have a hard enough time to balance in our checkbook, right? How we're going to pay for eggs and milk and all that, right? So it's not a easy thing to make policy decisions that affect any country. And let's face it, every currency in the world, the euro, the yen, right, the Australian dollar, all the ones that we trade here in futures are all tied to the US dollar, right? They don't stand alone, right? Now you can buy them separately, but they are all tied to the dollar index. So if our country's doing good, dollar index goes up, the foreign currencies go down. Dollar index goes down, in other words, a weaker dollar, foreign currencies go up, and it costs more to travel, yada, yada, yada. So again, there's another thing that his policies, the Fed's policies, not only affect the United States, it has a ripple effect worldwide. So it's not as simple as just say, we're going to drop it 5%, go back. Let's just magically go back to where we were in, 2022, right? Let's knock it right back, take that whole 5% that we raised it over the last few years. Let's just wipe it all out at one time. Could they do that? Well, yeah, they could. That wouldn't be very wise. The markets wouldn't react too well to that, but nothing says they can't do it, but it's not that easy, right? You just can't move that fast. So it's interesting. If you've never studied macroeconomics or microeconomics, I highly suggest you look at it. You can go online, you can read free resources. There's all kinds of places you can get studies online about how everything works together, right? You can go buy a college level book on macroeconomics, microeconomics, if you really want to get into it, right? It's a very I find that topic interesting. It may bore you to death. And I'm sure half of you are in here saying, I wish you'd quit talking about it. Let's go back doing something else. But I do personally find it interesting. I always enjoyed that part. So it's a deep subject. It's not easily resolved, no matter what your political views are. Right? So, anywho, questions, comments?
Excellent show, buddy.
Thank you. All right. Thank you, Johnny, for that rose, and all the others above you that did that. T-Mine and Wade, Tyler, Trader B, Restaurant Secrets over there. We got Jerry. We got Eric Moto's in the house, doing very well on his trade during that, but he's an experienced trader, successful trader, and in fact, he's one of our moderators, and he helps teach. Oh, Matt, that's so sweet. On your way to the gym. You're wasting your time going to that gym. You could be making money, right?
I'm trying to bulk up, and so I have to work at least.
I'm not talking to you, man. I'm talking to Eric.
Oh, sorry.
He's on the live.
It's a coincidence I'm going to the gym.
There you go. Good job, Eric. 4 figures today. That's a good. If you come over to futures, Eric, you could get you to quit making that pocket change. Come over here and make some real money, buddy. We'll show you how to do it. Come on over, drink the Kool-Aid. I know you know how to do it. Come on over. Hang out with us sometime. Don't be a stranger. We're here from 8:30 a.m. to 4 o'clock p.m. live training on a Zoom call. Come on over. You probably had enough of eating apples over there. Come on over. Come on over. Hang with us. We'll show you how to make real money. Come on.
Hey, Mark.
Eric's one of our moderators, and he helps with the Apple chat. We're always teasing him. Yes, sir.
Mark, you're always helping me and everybody out. Thank you, guys. Thank you, Mark. Something to point out real fast. I was noticing you were showing that gentleman the EWO. You were trying to switch it on, so you went up to the top left, toggled it down, whatever. You probably know this, but if you don't, if you just double click on the desktop, it'll pop up the EWO. Did you know about that? So, for example, go turn it on.
Yeah, well, I had it turned off. I turned it completely off.
Yeah. So turn it on, and then if you double click, it'll disappear. Big brain. No, not there. Click there again.
Yeah.
Okay, click above it, like on the chart.
Oh yeah, it'll bring that.
Right there,
It
click.
expands that, right?
And click again. There you go.
Yeah, but I had it turned off. I had to reload it. I don't.
So I use it on the queue if I ever need it.
Yeah, I don't use
click
it. So
on
that's why I turn it off. I actually
quick reference.
I actually delete it. So if I want it back, I have to put it back on. I'm a scalper. I'm not too concerned about the EWO.
That green color, though, I mean, does it hurt your eyes?
No, I like it. It's beautiful. I love it.
You ever see The Exorcist?
The original one I did, yeah. You know, you can put sunglasses on. He's always busted my chop about the colors on my chart. You know, you can change them, right?
Yeah, I was going to suggest, yeah.
You know, you can change them, right?
It is the Christmas time, the Grinch.
Okay. You know. Oh, how about I make it hot pink? How's that? Is that what you want? There, now it's hot pink. You want a hot pink instead of green? I make it any color where you want. You want it to be yellow? Let's make it yellow. How about that? How about that for burning your retinas?
It wasn't about me. I was asking if it hurts your eyes. That's all I was asking.
It hurt my eyes. I got cataracts. I can't see half of my screen anyway. How about that? How about that green? Is that green satisfactory to you? How about this one? How's that? Is that okay?
I'm good over here, Mark. I was just asking you.
Okay.
Over here.
No, if I don't like something, I'll change it. Once I figure out how to do it. Yeah, you can actually turn that off. You can turn it completely off also, right? So there's a lot on here with Coach's 3-point indicators I don't even have turned on. I turned them off, right? So it's fully customizable to put on there what you want on. You don't have to have this cloud in here at all either. It's just a quick visual thing. I like it. Why is my live no longer available? What's happened there? I need to refresh my screen or something here. Hang on. My tiki-talk. All right, here we are. All right, questions, comments over there, TikTok. You got any questions about over there on the YouTubes? If you haven't been there recently, you head on to over our website, americandreamtrading.com, and find out about all our memberships. We actually have our three of our programs. We have up to a 7-day absolutely free trial. You can find that information and more over on our website, American Dream Trading. We have the premium membership 7-day free trial. You train with Coach and the other training moderators from 8:45 a.m. through 4 p.m. in the afternoon, Monday through Friday. We also have our crypto membership, which they have their live training and trading on Wednesday nights. That's tonight at 7:15 p.m. You can take advantage of that. They usually have 3 or 4 hours in there. I don't know, until they get done talking, basically, depending on what's going on. Could be an hour, could be 4 hours. I mean, one night, I think they ran to midnight or something, didn't you? You guys, you was there all night long. So that's every Wednesday night, and they do have pop-up ones. And then we have the Futures 7-day free trial. We start training and trading at 8:30 a.m. So check those out. There's no reason for you not to try us out. It's absolutely positively free for up to 7 days. Head on over to our website, find out more about that. You also want to grab our free, absolutely free, always has been free, always will be free Discord, so that you can interact with other members and ask questions about trading. There's access to certain videos in there that are not available elsewhere for absolutely free. And there's discounts, there's other kinds of things. Now, it's limited what you can see for free, but every membership level, paid membership level, has its own set of Discord channels. So you may, as a free member, I don't know how many, I haven't counted, let's just say there's 6, I don't know. Just making up a number. I don't really know what the real number is. I haven't looked. Where the Diamond membership has access to like 100 channels. So the Diamond membership is a top tier one, so they get all of the channels inside our Discord. So, but anyway, you can check it out. You will need our Discord to be able to get our live Zoom links every morning. It changes. You have to be a paid member to get it. And those change every morning. So you need to have our free Discord to get the live Zoom training links every morning. So that's all in there. So membership does have its privileges. So head on over there and grab them. By the way, the 7-day free trial, each one of those, the premium, which is basically focused on stocks and stock options. The crypto obviously is just crypto. And the futures, right? They all have the full benefits and privileges of a paid membership. So you get access to the trading view indicators on certain programs. You don't get them with the premium, the low one. You do get them with the futures. So these, what you see on my screen, you have access to them. You have access to all the training videos and documents, same as a paid member does. All that, full benefits and privileges for up to 7 days for absolutely free. That's all I got to say about that. If you don't want to be free, you don't want to take advantage of free, you don't want to try to better your life and change your outlook and your financial situation, then so be it. You know, I don't make a dime if you sign up for a membership. So I just highly encourage you to go do it. Check it out for free. What do you got to lose, right? So, and you get to ask questions. So, all right. What else? Questions about the Fed meeting? Anything? A little bit different today. Questions, comments? Anybody home over there in the socials?
Wakey, wakey.
Wakey, wakey. Wakey, wakey. Hello?
I just walked back in the room. You're not talking to me, are you? Because I'm awake.
Yeah, we're.
I didn't know if you asked me a question. I was out the room.
I was just looking if anybody had any questions or comments, but you know,
okay.
You know, let's get her going. And you can see the volume has kind of returned to normal, hasn't it, on our charts? There's oil back to being slow again. All right, what's NQ doing? Anything? Flattened right out, right? All the excitement's over. Well, now we got that out of the way, hopefully we can return to normal once. Now, the other thing that's not normal yet, if there is any such thing as normal, is getting all our economic data released on time with the current information. So we're still behind the 8 ball on that. We haven't caught up on that. The data releases we're getting are outdated already. So once that all returns to normal over the next however long it's going to take them, hopefully next month, we'll get a better feel what's going on for real in the economy. That's what that one dumb report. Well, how do you know that's what's going on? We just know. Well, you know what? We talked about this in our live training session today. There's 12 Fed governors, I believe. They each represent a region, right? There's one in Cleveland that represents Ohio and whatever. You'd have to Google it, look it up. Maybe part of Pennsylvania, part of Michigan, whatever. Kentucky. They have a regions, and they all know what's going on economically in their regions. And when they get together for their meetings, that's one of the things that they discuss. You know, Cleveland may say, well, you know, manufacturing's really down bad in Ohio and meat chicken, and you know, West Virginia and Pennsylvania, it's just things are tough. Things are costing too much. And California over there, San Francisco governor will say, well, we're booming over here, man. We're making money hands over fists. It ain't never been better. Life is good. One down south, maybe Atlanta, will say, oh, no, it's great down here, too. So it's regional, right? We tend to focus on our own misery where we live, right? And don't realize that some parts of the country, it is actually very good, right? And in other parts of the country, it's actually very worse than what we have. So, but when they all come together as one committee, right? And one board, and then they discuss those things, right? And how things are going on in their region. Again, it's not an easy job, right? So, is it a hard job? I don't know. I'm not an economics major. It's interesting, but I don't think I'd want to be one, right? So, all right. All right, no questions. We're going to call it a day. We started early. Not going to sit here and stare at the screen. How about that? Hopefully you learned something new today. By the way, we are live here 3 times a day at American Dream Trading. And Coach is live from 9 a.m. to 11 a.m. Monday through Friday. I'm live here. We are live here. It may not always be me. We are live here from 2 to 4 p.m. for the Futures Education Trading Program. And then we have the aftermarket show starting at 4 p.m. over on our YouTube channel. Want to check that out at the top of the hour. It's a different type of show, and Don's over there moderating that. You can join with a live open mic and or a camera on if you so wish to. If not, you can just type into your chat box there. So we're glad you be here upon conclusion of this broadcast and all of our live broadcasts. They are immediately auto-posted over on our YouTube channel, which is aptly named, guess what? American Dream Trading, where you'll also find over 3,200 videos, training videos for absolutely free. Check it out. Make sure you click subscribe. If you're only watching us on TikTok, I suggest you go over to YouTube, sign up for your account over there, follow American Dream Trading on YouTube. If you're only on YouTube, I suggest you go to TikTok or any of the other social medias and sign up there also. Have a backup account in case one of them doesn't work some days. And that does happen from time to time. So anyway, glad you all could be here. Make sure anybody you come in contact between now and the time we meet again, that you lift them up. Don't be a discourager, be an encourager. Create lasting, lifelong positive memories with everyone that you come in contact with. And until
Hey,
then,
Mark.
what?
One last question, buddy.
What?
Who was the special guest? And then also, is it recorded somewhere where we could go back and look at it?
Eventually, you will be able to. And yes, we did have a special guest.
Okay, and I will find that video in the futures area.
It'll probably be, it might be there, might be in videos on demand. It might be a few days or a few weeks before it's actually processed and posted, but yes.
Oh, okay.
Yep.
Okay. All right. Thank you.
Yes, sir. Sorry you missed it. It was good.
Me too.
You'll get to see it, though. You'll be able to watch the replay because we do that for our paid members. We record our training and we keep it published, and it's always available. Another one of the benefits here at American Dream Trading. We will see you.
Can I ask one last thing? I'm sorry to cut you off. Who was the special guest?
Oh, we can't say if you weren't there.
Oh,
you'll
come
have
on,
to just
man.
wait. Yeah,
Oh,
see?
I'm not even gonna know how to ask.
That's on a need-to-know basis. All right. We'll tell you after we get off the air here.
Okay, appreciate
hang on.
you.
So anyway, we will see you same time, same bat channel tomorrow. Goodbye.